Today I'm going to talk about some advanced trading strategies, namely stop loss and margin trading. So I'm going to end up with the conclusion that these two tools should never ever be used. And this is something I personally think, and this is not professional trading advice. But I'm going to make an argument to say that these two tools, whilst as powerful as they should never ever be used in cryptocurrency, at least in its current state. So I want to start by explaining what these tools are, and I'm going to talk a little bit about what happened yesterday with the Ethereum price plunge. So Ethereum essentially dropped from $360 to $13. That's just insane. And it only happened on one exchange. And I'm going to just kind of tell you what happened and then why and how that relates to, never ever using margin trading or using stop loss. So you see a stop and see margin trading. So let's first talk about stop loss first. Stop loss, as its name implies, it can potentially stop you from losing a lot of money. Say, for example, you invest $1,000 into Ethereum and you want to exit the market when you have less than 500, or you have more, like you have $500 remaining. So basically what it'll do is it's an automated kind of system where if the system detects that you're going to have less than $500 remaining, then it's going to automatically start selling your Ethereum for you. It makes a lot of sense for traditional stock markets. If you're buying, especially if you're buying a lot of different currencies, you can set these stop losses to kind of allow you to exit in the event of a crash. So if it's just plunging and plunging and plunging with no end, and a lot of trading advice said never catch a falling knife. If it's really falling, just sell. So you're telling the program, hey, if it reaches this point, if Ethereum is at 300 and it reaches 250, just help me sell, buddy. And it allows you to sleep at night because then you won't lose all your money at once. So that's what a stop loss order is, and you can set that easily on something like GDEX. Then we'll talk about margin trading. So margin trading is available on Poloniex, GDEX, and it's also on Kraken before. And I'm going to talk a little bit about my margin trading experience as well. But what margin trading is essentially you're trading on borrowed money. Say, for example, you have $360 and Ethereum is $360, then you can only normally buy one Ethereum. Okay, that makes a lot of sense. $360 for one Ethereum, and you have $360. But say you really want to go really aggressive and you decide to do a 5 times leverage. That means you can buy 5 Ethereum with $360. And if Ethereum increases by just $10, you get 5 times the gains, right? You get 5 times more. So that means for every $1 gain on Ethereum, you get $5. And that's insane. I mean, this is the kind of the mentality a lot of people are adopting right now, especially if they think they're advanced traders. Then they can start using a leverage position and they really believe a currency is going to go up, then they can make a lot of money right now. So these are two tools that can potentially help investors. But what really happened down, on this 22nd of June, so that was yesterday, really showed us that these tools cannot be trusted. So Ethereum essentially on the GDEX market crashed from around $300 something to almost what some people call $13, and some actually say it went down to 10 cents at a certain point of time. So this sounds like a software malfunction, but GDEX on the blog has reaffirmed that this is not a software bug. The software was working as intended, and they're not going to issue any refunds. So let's take a look at what happened. So what happened was that someone decided to put in an order to sell Ethereum, and it was a very large order. And when they sold it, they didn't put any limits or whatnot. They just sold it at market. And the market algorithm is like this. If you imagine the computer as a person, you give this much Ether to this computer, this person, let's call him Bob. And Bob's going to go around and just try to sell your Ethereum as fast as possible. First, it's going to go to the first guy who's making the largest offer. Maybe it's at 360 and say, hey, Want to buy some ether? Okay, you want to buy some ether? Well, we'll go for it. I'll sell you some ether. And he's gonna keep going and going and going and going, and trying to sell that off. And if he has a lot of ether, he's carrying a big bag of ether. He's just gonna go down the line and he's gonna start selling ether. And of course, once you start going down the line, you sell for cheaper and cheaper and cheaper and cheaper. And because it's a computer algorithm, because computers work very, very fast, there is no time for humans to respond and say, oh, look, the price is dropping, let me buy some more. So, this guy is with carrying a big bag of ether. He's just going down all the other computers and just start selling and selling and selling. That's why it dropped from, 317 to 224. So this can happen in split seconds, even if if the computer algorithm is running really quickly, or if people don't have time to respond, which is probably the case as well. If anyone who is smart would figure out, oh look, if Ether is really trading at 220 on GDEX and it's trading for 320 on Poloniex, then I'm just gonna start buying Ether on GDEX and selling on Poloniex and moving it to the next market. And they'll just set up some buy orders, and then Bob will be, oh hey, there's some new guy here. I'm gonna sell it for more expensive now. But there was no time to respond to that, and then Bob kept selling. So it reached a point where Bob had a huge bag of Ethereum and he started selling it, and now it's at 224, and that's the actual market price on GDEX. It's not the price on any other exchange, and any other reasonable human could have responded to this and said, okay, let's go and start buying some. Let's go start buying some Ether, and that will increase the price. But there was no time to respond. So then something else happened, which is your stop loss or your margin. So if you're on a 5 times margin and it dropped from 300 to 200, that actually might be your complete account amount. So say you had $360, the potential loss now of your contract of how many your potential loss might be 360. So it might be the case where the exchange now has to decide, all right, if this keeps going, if it keeps dropping, guys, I need to sell, otherwise your account's gonna be in the negatives. You're gonna have negative assets on this account, and exchanges always protect themselves. So they're gonna say, all right, we're gonna start just forcing you to sell. That's what a liquidation is. And this is called a margin call. And as the name implies, usually back in the day, they will call you. They're like, hey, yeah, your Ethereum, it's dropping a lot. If you want to keep it, then you got to pay us this amount of money. And you can say, yeah, sure, I'll do it. I'll just wire you some money and it'll be over. But with these online exchanges of how fast things move, they won't call you. There's no support here. So they'll just immediately say, all right, your account, you don't have enough money to kind of hold your Ethereum on this leverage position because your losses are now more than how much you have on your account. Congratulations, we're gonna just sell your stuff. So now Bob has more stuff to sell, right? So now the guy at the market, he's like, all right, it's at 228, and all these kind of triggers are happening. People have these stop losses or these margins, and they're being forced to liquidate. So, okay, guess what? I'm going to sell more. So now he gets another big bag of Ether. And this is true with stop losses as well. Stop losses, you can set a point at which you think, okay, this is as low as I can take it. If the market does crash, I want to auto sell at 260 or 230. So these commands have been issued, and there's no human response time to kind of respond to that. So then, Bob has tons and tons of more Ether to start selling, and he goes and sells even more. But at that time, yet again, humans don't have enough time to start responding to this and start, clicking that buy button. So then he keeps selling. Right now he sells, okay, who's going to give me the highest offer? Oh, 220? Sure, I'll do it. Oh, 180? Sure, I'll do it. 150? Sure, I'll do it. All the way down to 13. That is insane. That is just utterly insane. And in fact, some people say it went down to 0.10 cents at a certain point. Like, anyone in the right mind would buy Ether at this time for 10 cents. Anyone. You go to any other exchange, you can just sell it for 300 or more. So that's the kind of situation that GDEX was under. So technically it's not against the trade rules. Technically this was just happening so fast because all these computer things were just hitting the market. And of course at this current stage, these exchanges are so overwhelmed, there's so much lag on the system that people can't start issuing new buy orders. I mean, if you can travel back in time, I would love to issue buy orders for even $20 or $13 Ethereum. I'll buy as much as you want. I'll buy millions of Ethereum for that price, and I'll just sell it, and I'll be a multi-billionaire by now. So there just wasn't enough time to kind of really react to that, and that's why it fell by this much. Is it a computer glitch? No. Could that be prevented? Maybe, because we just talk about circuit breakers. There's talk about various ways to improve their code, or even reduce lag on their servers. Might actually have prevented that. It would have given traders time to start setting up more buy orders and just be able to soak up that much Ethereum going into the market. So it just goes to show that at a time of this kind of flash mini crisis, it's really hard to go on exchange. Everyone might even identify that this is happening, and when they try to log on, it's gonna crash. I mean, I've seen Poloniex performing very poorly. I've seen Kraken performing very poorly. I'm not sure if it's on my internet connection or not, but it does happen. And even if you're the most advanced trader, and even if you're so used, you have like 15 years trading experience on various stocks and other assets, cryptocurrencies are different. Cryptocurrency exchanges are different. They operate on different rules, and they operate on their own rules. And that's why if you're playing with their own rules, you should never ever use either margin trading or a stop loss order, because of just freak accidents like this. Because of I've got myself caught up middle of last year on a leveraged position, and from that experience I know for sure that I'm never going to try this again. I mean, of course, I've definitely made a video before about this, about the best cryptocurrency advice, and one of the points is to never use a leverage position. But I really wanted to re-emphasize this at this time, and I do really feel sad that these exchanges aren't doing more. There's a full article explaining what happened by Adam White on the GDEX blog, but really, I understand why they don't want to fix it, because they believe that it's not a computer error. There was no error that occurred. This behaved as it should have. But at the same time, I think a lot of people have lost a lot of money on this. Maybe entire accounts have been wiped. And only for people to realize, well, Ethereum's back to 300 something right now. Nothing happened. It was just, a mini glitch. It's a flash, sale. And it's a shame that this can happen right now, and it's gonna be possible on every single exchange. I think that's something I have to emphasize. Because these exchanges get attacked every day by denial of service. They get constantly being used by more users than they can handle, and that's why it's really possible that something like this can happen again. I strongly advise you that, or not advise you, I think this is very important. With all cryptocurrencies, it's possible to give actual financial advice, but I would just want you guys to know that this is something that's happening. And if you're using a leverage position, even if you've been using it for 20 years, 30 years, and you feel confident about it, you should be very, very careful. Guys, thank you so much for watching this video. I would love to hear your comments and about this. I mean, I was about to say, maybe stop loss is still a good idea, but after reading what happened and after reading the response, I really don't believe that. So guys, thank you guys so much for watching this video. I would love to hear your comments. If you guys want to watch more videos about various cryptocurrencies and news, do subscribe to my channel. I have tons of that coming up, and I hope to see you there. Thank you guys so much for watching. See you next time.